Hello everyone, this is Vishnu Deepan here on behalf of Traders Corner. So, as I have promised last week, I have come up with a new education series where it will be helpful for the new beginners and the experienced traders, or the ones who is in the market and who is finding difficult to identify a trend or identify what is happening in the market. So, as a part of it, I'm starting with the trend analysis. Okay. So I will not be going deep into the basics, but still I will give a touch of it. So as a part of it, let's start with what is a trend? A trend is nothing but it is the direction of a market or a stock or an exchange, whether it can be uptrend, downtrend, and it can be sideways. So these are the three types: uptrend, downtrend, and sideways. Okay. So what is an uptrend? For example, market is at this point over here, the lowest small point. It went up and it came for retracement, but nobody will be knowing it whether the market will break the previous high and will continue up or it may come down. Nobody knows. So as a part of it, like how to identify, this is the lowermost point. It reached a high and again low. So whenever market is making a fresh high, that is the point where one can come to a conclusion market is an uptrend. So here I just consider when we reach for retracement, that is nothing but the lowermost point. The high before the lowermost point, I consider them as a, or I took it as a decision point. So whenever market gives a solid bullish closing above the previous high, or what I call the decision point, that is where market will change from, or one can come to a conclusion that market is in uptrend. So as a part of it, like there are two types of traders. They are aggressive traders and conservative traders. So anyone who wants to take or who is capable of more risk, whenever there is a solid candle closing above the previous high or above the decision point, aggressive traders they'll be entering in and they can go for a higher targets. But if one wants to be a conservative trader, one has to wait for the retracement. Either it can be the previous point where it broke, or else just draw a fib ratio and wait for the market to retrace to 0.5 to 0.618 levels and then initiate a trade. The difference between an aggressive trader and a conservative trader, it will be if anyone who is entering a trade immediately after the breakout, market can be at this point and the stop loss will be this point. If someone is making a trade, market has reached here, solid candle closed here, and if they are initiating a trade here, wrong position, sorry. Okay, if someone is entering a trade here, what will happen is the stop loss. If someone is entering a trade here, their stop loss will be the low point. So in that case, the risk will be more and the reward will be equal or lesser. But whereas if anyone is initiating a trade at the retracement point, their stop loss will be very less. Okay. So this is how one should initiate a trade. So after breaking this point, this will be the new high. And again, if someone wants to go for a new trade, and again, now this will become the decision point. Okay. So always when you're seeing or when you're approaching a market fresh, look for a lowermost point and look for a decision point to initiate a long or to identify a uptrend. Vice versa, it is the same. This is for uptrend and how to identify downtrend. This is the highest point. Okay, and it came down. This is low and it went up for a pullback. So that is the high point. Okay, so again at this point one will not have a clear idea whether market is it has gone for retracement or it will come down. So when we'll come to a decision, so for me this is the lower point, this is the highest point. So this is my decision point. The low point will be the decision point for a downtrend. Okay, because I'm in a high point and I should look for a low point before the high point. So this becomes my decision point. So whenever market closes below the decision point, that is where I will come to a conclusion. Market is in downtrend or it has changed from uptrend to downtrend. So what should I do? Wait for if anyone is an aggressive trader, they can go for short directly here and look for a and keep this high as a stop loss. So go for the risk reward accordingly. And if someone wants to be conservative trader after break down, wait for the market to pull back. Okay, so wait for this area. Like if you plot a fib from here to here, that is high point to low point. Wait for the market to retrace to 0.5 to 618 levels and initiate a trade. In such case, what happens? Like your stop loss is only few points compared to from here to here. Okay, so it changes like that. Again, what happens? The next decision point will be this one. So whenever you get a close below the decision point, you can initiate a trade here. Okay. So this is how you identify a downtrend. So what is a sideways market? Sideways market is nothing but this is the area where the market or the structure, it will not make a new high or it will not create a new low. Sometimes what will happen, there will be a fake breakout. Only the candle will go up, only the wick will go up, the candle closing will come below this point. And again, what will happen? The market will come back to the previous low point. So like this market will be moving up and down, up and down. So this is how one should identify a sideways market. So in this case, if you are initiating a short here, this will be the target, and if you're initiating a buy, this will be the target. So do not expect for high rewards in case of sideways market, and this is how it works. Okay, this is simple thing about trend analysis and where to buy and where to sell, how to make a decision. So quickly, I'll go to a chart and show you how to identify it. Okay, for example, if we see here, so this is the highest point. This is the highest point. Market is making a high low, high low, high low, high low. So we came to the point. So this is the lowermost point, and this is the previous high. This previous high will become the decision point. Okay. Okay. This will become the decision point. So what happens here? This is the high point. This is the low. Whenever market breaks a structure, if anyone who is the conservative trader, if they might have taken an entry here, what would have happened? It might have come down for retracement, but he'll be in a huge loss already. So it's always best to wait for the retracement to happen from here to here. Wait for 0.5 to 6 minute levels, and the low point will be the stop loss. So here, let's see what has happened. If someone has gone for a long position here in this area, what is the risk reward? Okay. So for a risk of 14 points, the reward what we have obtained is 52 points. So if anyone is following this method, based on this entry, the minimum profit will be 1 is to 2 actually. And if anyone wants to go for a safer risk, this is the lowermost point. You have initiated trade here. The target will be previous high. So anyone can go for this. Even if you go as per that, we have a risk of 14 points. The reward will be 28 points, which equals the same thing like first supply or else 1 is to 2. So if anyone is following the same setup, there are more chances on a swing trade setup. The risk reward will be more than 1 is to 3 to 1 is to 5. Okay. So this is how it works. This is for a buy setup. I'll go for a low setup actually. I have plotted already and I have kept it. Okay, so this is what it is. High point, decision point. This is my decision point. Whenever market close below this, I need to initiate a trade here. Market did not come up for a pullback. So what I do, if I initiate a trade here, the stop loss will be more and it will be very high. So what I do, I look for next opportunity. So again, what has happened? This is the low point, this is the high point. So this becomes my decision point. I will wait for the, okay, this is the candle closing. I have to wait for the candle close to go below the decision point and then initiate a trade. Okay. So here what has happened? So based on that, if I might have gone for an short trade at this point, low, it came down, it came here for retracement. This high will be the stop loss. So my entry is here. So for a risk of 18 points, what we have achieved is 45 points. Okay. So this is how anyone should go for a short trade. So this is very simple. Just understand the logic of the at what point the market trend is reversing, what is your stop loss, what is your entry point. You should know all these things. Again, I have more examples. This is the highest point, okay, and these two are equal. It can be double top. So I consider this as a high point. This is your previous low point, which is the decision point. Market close below. Wait for a pullback to happen. Initiate a trade. This is short position. I initiated short here. So this is my stop loss. See what is the risk obtained on a swing trade setup. For a risk of 35 points, it gave almost around 200 points. So that is how the trend reversal works. And if you're at the right point and if you're at the right entry point, you will get the best reward. Okay, so this is what how to identify a trend and what should be your entry point. So I would like to give some more points related to the content what I said now, which is nothing but so for a long or a buy, always identify a lowermost point and then followed by that find the nearest higher point just before the lowest point, and that highest point become your decision point. A decision point is nothing but the point if a new candle close happens above the decision point, that is where a trend reversal happens. The same thing for a short or sell, identify a highest point, and after identifying the highest point, then find the nearest point, nearest low just before the highest point. So that becomes your decision point for sell. So one should be, sorry. So one should be able to identify this decision point. It is very important because this is where a trend reversal happens. So you guys need to read your charts again and again, different time frame, different sector, different stocks. So when you do this again and again, your eyes will get used to it, and you can easily grab a very good risk reward based on this one. This is very simple method. There is no holy grail, there is no magic, there is no major thing to be done. If anyone can identify this one, they can be very successful on a longer run without the use of any indicators or any EAs. Easily one can identify a trend and they can be profitable. Thank you guys for watching my video. I will come with more education series, more setups, how one can enter into a trade without much any complex structure. which are without making things more complex, and it will be easy for a trade. Okay, guys, do like and subscribe my YouTube channel so that you'll be aware if there is any new content coming in, and also your like and share will encourage me to give more content for you all people. Thank you, guys.